Hey everyone, how's it going? It is the aftermarket. So we just got the closing bell for the market on November 9th, and we had a pretty exciting day. So let's take a look at exactly what happened. So looking over here at the S&P 500, we can see that we hit that MA90 just like we were anticipating, and it got rejected very hard all the way down almost to the MA50, so almost covering this entire range. Now, technically, that is still chop because we were identifying this range in between the MA50 and the MA90 as the consolidation region. So we're still inside of that region, but what you're seeing here is that all of these moving averages are starting to converge. That MA50 is coming down, that EMA8 and EMA20 are coming up, that MA150 is coming up. So that level right there is going to be where we actually end up converging is going to be a very important point. If we break below that, then that's not so great. We're probably hitting the MA200, but that's rising higher also. So either way we look at it, it is looking like this about 50% retracement is going to be a very important level. So from here, do we stay within this consolidation range or do we pull to that 50 retracement level? That we can't say right now. Me personally, I'm favoring the pullback to the 50% level. But as of today, with that large bar downward and that huge movement downward, that is giving that theory a little bit more credence. However, we're still low volume. So I'm not super convinced that that's exactly what's going to happen. We could still consolidate and chop. Until we get volume back in the markets, we are probably not going to get hugely directional. So we really want to see capital and money being put to work. And really, if I was an institutional trader still, what I'd be doing is I'd be waiting for this to flit down, go to about that 50% retracement level, and then that's where you're going to see the volume. That's where I'd be going large-handed movements, buying long positions for the bounce back upwards. So that is most likely what the other institutional traders are doing right now. And that's what we're just waiting for that setup. So most of this week, we've just been sitting on our hands and been very patient until this morning or yesterday evening. I guess, no, I didn't send anything yesterday. Sorry. This morning when I said, hey, if you're going to do anything, go short right here, because at the very least, you'll capture this range from the MA90 down to the MA50, maybe all the way down to the EMA20. And we got that range today. We got almost all the way to the MA50 today. There might be a tiny bit more in the tank for tomorrow, and then it'll be the end of the week. And actually, there's a pretty good chance of that because traditionally, especially right now with the world politics the way they are, most traders are going to either hedge or take positions off into the weekend. And that is a downward pressure force in the market. So most likely tomorrow we could float a little bit further down. So any puts that you had, you can go ahead and, well, you don't have a choice because the market's closed, but be very comfortable in holding them. And then tomorrow you can decide if you want to take profits on those or if you want to hold them over the weekend and see what happens over the weekend. Most likely, I personally would be either hedging those or taking profits on them. So let's see how it developed during the day, because we drew all these crazy lines during the day to see if we could capture the movement of the market. And we said if it went up, then we might expect this. It did not go up. And we felt more strongly that would be going down anyways. And then we said, hey, we're going to trade between these purple lines and then watch out if we break below this purple line. And so what did we do? We traded down to the previous close, bounced up to this purple line we drew right here, traded down to this purple line that we drew, traded back up to the purple line. And then so you can see how effective these purple lines are. And this bounce right here, you say, okay, well, what about this one? What did that bounce off of? Well, let's take a look and see what that bounced off of. I'll put it in red so it's a little bit easier to see. And actually, so this purple line I drew at the low, but I could have drawn it where the red is because that's where the consolidation is. So remember, everything is a range. It's not the exact line, but you can see how well the market is reacting to these levels that we're choosing. They're definitely keying off of those levels. So again, markets have memory. Markets have memory because people have memory. They get freaked out when they lost money or made a whole bunch of money at a certain level. And so they will revisit the same price levels over and over again. The shorter duration in time that these price levels get hit, the stronger that memory. So, and the more likely the position is still in hand. So once the closer time frame that we're looking at for these price levels, the more likely that we're actually going to get a response off of it. So over here, Powell started speaking, and you can see that we flitted around. We did get a little bit, not huge volatility, really. Actually, the bars are about the same size. And then we maybe didn't 100% like what Powell said, and we traded even lower into the close. So everything is developing as we expected, and that gives us even more confidence in our views of what's happening in the market, which is currently just consolidation, but a little bit stronger conviction that we can pull back to this 50% mark. Let's just draw that 50% mark, just so that's the best way to do it. I guess I could do, I really don't like Fibonacci's, but I'm going to draw one because it does have nice levels at the to right there. Is that? No, never mind. I'm not going to use a Fibonacci. So this move right here was about 6.91%. So I'm going to look for 3.45-ish%. Okay, and then I'll draw a line there just so I know, and I'll put this over here in greenish blue color, and I will label it as possible area of retracement. Okay, so you can see that's actually closer to that MA200 rather than EMA20, but that EMA20 is going to be a pretty strong level. So even if we only hit the EMA20 and then start bouncing up, that would be perfectly fine as well. Again, these are regions, not precise lines that we draw on these charts. Not a whole lot else going on in the markets. Like Fed is quiet, economic data is quiet, earnings are starting to taper down. So really, we're just looking at things very technically. Let's take a look at VIX. VIX should have gotten a pretty big spike today. Yeah, so let's move upward movement in the VIX. And where did we visit before? Probably in this area. So it just happens to be, we don't look at moving averages on VIX, but that MA50 area is a pretty good place to start looking. Just happens to be right now because of this chop over here. So if that happens, then that would be correlated with a pullback to the EMA20. So everything is supporting each other and our viewpoints. The only other thing that I might be looking at is how broad-based is the sell-off today? So or was it just broad across the sectors, or were there certain sectors that were favored? And definitely there's a spread. So the safer ones, gold, silver, that makes sense, right? Flight to safety. And actually semiconductors held up really well, which is really, really interesting. So did communications, and technology held up pretty well. Staples, not surprising because that's more defensive sector, but to see that XLK fell about the same amount as XLP, that's really interesting. And communications and semiconductors fell even less. So there's still risk appetite in this market. So the ones that got hit harder looks like are real estate, so a little bit utilities, retail, so things where more discretionary spending and interest sensitive sectors. So seeing that this risk appetite still exists inside the market gives me even more confidence that we won't trace much further than either the EMA20 or the MA50. Right now, I'm favoring the EMA20 over, did I say MA50? The 50% retracement line is what I meant. So I'm favoring the EMA20 based on everything that I'm seeing. So we'll see how it develops. I'm not expecting anything huge or major tomorrow. Going into the weekend, going into Veterans Day weekend, again, not a holiday for the equity markets, but usually a holiday for the bond markets. So habitually, traders will, they tend to take their vacations or their time off at the same times during the year. So even if we don't actually get a holiday like this year for Veterans Day, habitually a lot of the traders will still take the time off, or at least they'll be a lot quieter in their trading. So tomorrow, not going to expect a huge amount of movement. We could move down lower. I could be surprised if we could go all the way down to that EMA 20, but down to the EMA 8 right here, or even the MA 150, that wouldn't be too surprising at all. And then as we're taking risk off for the weekend, and then we'll see what the new week has in store for us. If we get to that EMA 20 or retracement, then we're going to have field day looking for opportunities to the upside. All right, so that's going to be it for today. If you have any questions or if there's something that you want me to go in further detail, just let me know, send me a message, and I'll be happy to do that. All right, so I'll see you guys. Have a wonderful evening.